Our top story tonight is about India, about India's economic growth perspectives. A new report has come out. It's by the rating agencies Standard & Poor or S&P. And it showed confidence in India and its economy. S&P is one of the big three global ratings agencies. They track and regularly update economic growth forecasts. And this agency has revised India's growth forecast. It is now 6.4% for next year, up from the earlier projection of 6%, which means the country is doing better than expected in the current fiscal. Although 2025 is now predicted to be slower, from 6.9% to 6.4%, and that's the S&P forecast, lower than India's own estimate of 6.6%. That's by the Reserve Bank of India, the central bank of the country. So basically, India will grow strong this year, and the momentum will continue in 2025. And then in 2026, there's another big bump due. That's when India's growth rate should hit 7%, making it one of the leading growth engines of Asia. Now, let me tell you why this is a very significant report. Think about what's going on in the world at the moment. The war and instability in West Asia, the conflict in Ukraine that shows no signs of ending. There are also constant tensions between the US and China. All these things are bad for business everywhere in the world. And they seem to be getting worse at every turn. Despite all this, India remains resilient. And not just resilient, India is defying expectations. And that is why this report is so important. It's optimistic about India and some other Asian nations. Vietnam, for instance, is projected to grow at 6.8%, the Philippines at 6.4%, Indonesia at 5%. These are the figures for 2026. So S&P is predicting a rising Asia, and this rise will be powered by India. Now, you may have noticed one major omission in the countries that we mentioned. This list does not include China, Asia's old economic driver. S&P's outlook for China is not rosy. The headline itself says, China slows, India grows. And here's what the numbers say. China would grow at 5.4% this year. That's better than previous projections, but after that, China's growth will stagnate. 4.6% in 2024, 4.8% in 2025, and again 4.6% in 2026. Do you know the last time this happened? The last time China had 2 consecutive years of growth below 5%. 1989 and 1990, just after the Tiananmen crackdown, almost 35 years ago. And now it's happening again. So China's golden age of growth may be nearing its end. And there are a number of reasons for this. Its debt-laden property sector is on the brink. S&P says that's a major reason for the slowing growth. The low demand for properties and the resulting strain on developers. But that is not the only reason. There are also geopolitical tensions. The world is finally waking up to the dangers of investing in China. They're either trying to decouple or de-risk. Countries are looking at alternatives, turning to India, Vietnam, and other Asian nations. The latest reports say Apple manufacturer Foxconn plans to invest $1.5 billion in India. Tesla is eyeing a $2 billion investment. All of these companies have major factories in China already, but now they're looking at India. So it's not a coincidence that India is seen as Asia's growth engine. The S&P report also highlights higher domestic demand as a major growth driver, which again puts India in the driver's seat. India has a relatively young and upwardly mobile population. And these people will continue to generate the demand for goods and services. China, on the other hand, is aging rapidly. Its internal demand is faltering. Now, when you connect all these dots, you get the big picture. China's era is coming to a close. It will begin to stagnate unless it can fix its underlying issues, which is a tall order. So it's more likely that the baton has truly been passed. The future belongs to India. We still have a long way to go, a lot to do to catch up. But it seems like we're on our way.